Iraq's going to start attacking shipping in the Gulf tomorrow. What do you think gold's going to do? I said, you tell me a war is going to start tomorrow? Yeah. So by 98, I had stood up in conference in London in June, and I said, Russia's going to collapse. I give it about 30 days. That became the long-term capital management collapse. I got blamed for that mainly because the London Financial Times had snuck in the room and put it on the front page. Armstrong says Russia's going to collapse. We issued silver trade dollars in the 1870s, which weigh a little bit more than a silver dollar. They were used for trade with China because China had a different monetary system based on silver. So we had a trade dollar to do business with them, which had more weight in silver than a domestic silver dollar. And that's a two-tier system. The Europeans were convinced that the dollar was going to crash.
Global financial markets are inherently driven by early capital movements rather than sudden surprise events. When money moves behind the scenes, major geopolitical shifts and economic panics are already set in motion well before the general public notices. Martin Armstrong, a well-known economic forecaster, author, and financial commentator, emphasizes that underlying capital flows always reveal upcoming shifts long before they manifest publicly. Quantitative forecasting models have repeatedly demonstrated this by generating accurate predictions, such as anticipating the collapse of Russia within 30 days during 1998, and forewarning the Central Bank of Lebanon exactly 8 days before its civil war erupted. Similar capital movements were tracked prior to the Hamas attacks when defense stocks surged, as well as before 9/11 through unusual airline put options. These historic events prove that smart money migrates well in advance of global turmoil, making capital flow tracking an essential tool for market predictions. Now, we present the clips from Martin Armstrong's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
Then, back in the early 80s, I started because we were probably the first in foreign exchange forecasting. It just started, the currencies just began trading in futures in 72. And I got called into the very first thing because nobody understood hedging. Nothing back then. So I got called into Franklin National Bank, which failed in 74. It's the first bank that went down because of foreign exchange. And that's the bank that started MasterCard. So I think they were the 10th largest at the time. So after that, I got basically get the guy that did that one sort of thing, because they didn't teach this stuff in Harvard or anybody. It just started. No. And then I got a call from Lebanon, the Central Bank of Lebanon. And they asked us if they found a ledger with prices back into the mid-19th century, and could we create a model in their currency? I said, sure, send it over. We'll be glad to put it in. I put it in, and I thought there was something wrong with the data. And I called them. I said, look, this is, not good. It says your country is going to fall apart in 8 days. And very calmly, they said, well, what currency does it recommend? Which I thought, what?
Interesting. Did you hear what I said?
It says the Swiss franc. They said, thank you very much. And 8 days later, the Civil War began. So what it showed me that they saw the money moving in advance. So they knew what was coming. Yeah. They only keep me for the timing.
Yeah.
And the same thing, I had a client in Saudi Arabia, which was one of the biggest shippers in the Gulf. And he calls and says, Iraq's going to start attacking shipping in the Gulf tomorrow. What do you think gold's going to do? I said, you tell me a war is going to start tomorrow? Yeah. So by 98, I had stood up in a conference in London in June, and I said, Russia's going to collapse. I give it about 30 days. That became the long-term capital management collapse. And I got blamed for that mainly because the London Financial Times had snuck in the room and put it on the front page. Armstrong says Russia's going to collapse. If I hadn't said it, it wouldn't have happened, which is bullshit. But what I've learned over the years is that somebody always knows.
Yeah.
In the case of Russia, we saw 100 billion going in, but we saw 150 billion coming out.
Yeah.
And so over the years, I've seen it, we track it. the Hamas attack of October 7th, all the defense stocks started moving a week in advance. The SEC used our stuff on 9/11. They went to go look who bought puts on airlines a few days in advance. And what you find is like all the terrorist attacks. Hey, if we can make some money out of it to fund the next one, they do it. So that's what I've learned over the years. When I created this computer, it wasn't to predict war, just tracking capital flows. And then all the stuff that's come out of it has been very, very interesting. And it's, people ask me about, we were the first to create an AI system. And I said, AI can't do something and discover it by itself. It can, chat GPT, it can tell you what Lady Gaga's dog's name is, all right? But it's not going to come up and say something brand new. IBM spent $4 billion in creating Watson. It was going to cure cancer. They sold it for scrap. It's great for research, things of that nature, but it can't create something new. And like I said, I created this computer. I didn't intend to forecast war. Look, there never was a petrodollar. That was more or less an excuse that when Bretton Woods collapsed in 71, you had a lot of the gold bugs that were insistent that without gold, the dollar would collapse.
Yeah.
And it went up. So then they came up, oh, well, it's really backed by oil. All right. It sounded nice, but you can Google what percent of energy is the world GDP. It's minuscule. The real strength of the dollar, and I've dealt with forming the EU, etc. What really backs the dollar is the American people. We have the big consumer economy. Okay, so Japan's got to sell their Toyotas to Americans. Germany's got to sell their BMWs. And those things have to be priced in dollars. So it's not just energy. Okay. No. And that's far greater. Trade is far greater than just simply, pricing oil in dollars. Oh, they're going to do it in euros. So that's going to kill the dollar. I've heard these things for decades. I can even tell you back then in the 70s, they were so convinced the dollar was going to crash that they judged America by themselves. And I warned them, I said, I may be the only American that even understands what a two-tier system is. It's where you have two currencies. For example, South Africa did that. They had the rand, but then they had the financial rand. The financial rand was available for international conversion, but not the rand. So it's a control mechanism. And the U.S. had it for a little bit in the mid 19th century. You can look up, we issued silver trade dollars in the 1870s, which weigh a little bit more than a silver dollar. They were used for trade with China because China had a different monetary system based on silver. So we had a trade dollar to do business with them, which had more weight in silver than a domestic silver dollar. All right. So that's a two-tier system. Yeah. And the Europeans were convinced that the dollar was going to crash because they thought that the U.S. would create a $2 tier system by jettisoning the euro dollar market, which was about $1 trillion. And the view was they were going to be blue dollars versus green dollars for domestic. And that's really why so much capital came into America between 1980 and 85. Because people thought, it's just a rumor, but rumors move money at times. Yeah. Right. They thought the U.S. would default on its euro dollars. Yeah. So they to domestic dollar deposits. That pushed the dollar up dramatically in 85. The pound fell to par, etc. So a lot of these things are not necessarily statistical facts,
Yeah.
but capital moves in anticipation,
Yeah.
and sometimes for the real thing, and sometimes just for a rumor. And we have to understand, sometimes a rumor can move money dramatically, just the same thing as a fact.
The widespread belief that the US dollar is strictly backed by oil or a petrodollar system remains a persistent economic myth. When the Bretton Woods system collapsed in 1971, critics insisted the currency would crash without gold backing, giving rise to claims that energy backed the currency. However, energy represents a minuscule portion of global gross domestic product. In reality, the true strength supporting the dollar is the massive American consumer market. Major industrial nations like Japan and Germany must sell manufactured goods to American consumers, forcing global trade to remain priced in dollars. Historical monetary structures have often relied on two-tier systems, such as the 1870s silver trade dollars used for commerce with China or South Africa's financial rand. Capital flows are ultimately driven by consumer demand and international trade necessity, rather than simple commodity backing. Now, let's get back to the interview.
You're dangerously bringing in the potential for all three major powers. China gets a lot of its energy from Iran, and they built a railroad that takes it straight out of Iran to China.
Right.
And then you have Russia. We've used Ukraine as a proxy war against Russia to drain its resources, and honestly, they're doing that to us with Iran. It's come out that we're, spent so many missiles, etc. And then you have Taiwan concerned that we don't have the missiles to defend them.
Yeah.
And these things take 2-3 years to replace. It's nice to claim you've got the smartest, most intelligent weapons. Great. However, the other guy is making $50 drones that you're then going to send $1.5 million missile to destroy. And because it might miss, you send two. So we're spending $3 million for a $100 drone.
Yeah.
This is why Iran, honestly, I don't know whoever came up with this bullshit, but Iran has been planning for this war for more than a decade. They amassed the biggest stockpile of ballistic missiles probably in the world. And what they have, like I said, they're one of the smartest, well-educated countries around. They understood, how do you defeat Israel? Solution, you overwhelm them. You send in 100 drones. Then they got to send all their missiles to attack. Suddenly they run out. Now you can send the real stuff. Okay. It's a very clear standard tactic.
Oh.
I mean, anybody's been to ancient Greece or to Greece, you see a lot of the columns pushed over. Why? Because they had lead reinforcing rods for earthquakes. So that a lot of those pillars you see were pushed over during World War I to get the lead to make bullets. The Parthenon was intact. They had it as storage for ammunition, which blew up. That is what blew the hole out of the Parthenon.
Yeah.
This stood for 2,000 years. It was World War I. They blew it up. Entirely sure that the U.S. would be able to defend Taiwan.
Yeah.
So I have been in discussions back and forth, and I can tell you that, when I was called in, they said they wanted to give me a briefing on Russia. They said, look, we agree with you. We're not going to be at war with Russia. It will be China. They see China more as attempting to expand and creating an empire, whereas Russia is not, despite the NATO bullshit. Putin has come out many times. We're not interested in invading Europe. What are you going to get out of it? Nothing. They have no energy, no gold, nothing. It's just an expense to do it. When Japan went into Manchuria, it was for assets, natural resources. Napoleon, in trying to take Russia. Russia is the richest country in the world from a natural resource perspective. Okay. So there's more of an incentive for NATO and Europe to invade Russia than the other way around. And all you're going to get with invading Europe is a lot of dead, bodies and no spoils to come out of it. Throughout history, these armies would follow Alexander the Great or whatever because they benefited. They shared in the spoils of he couldn't say, well, let's go conquer this country. What are we going to get? Oh, nothing.
Modern global conflicts are increasingly defined by asymmetric warfare and economic depletion strategies rather than traditional military engagement. Low-cost technology has fundamentally disrupted defense economics as adversaries deploy $50 drones to force defense systems into expending million-dollar interceptor missiles. Because defense systems often fire multiple missiles to ensure a hit, millions of dollars are spent neutralizing negligible threats. Meanwhile, geopolitical dynamics center heavily on strategic resource acquisition. Intelligence perspectives suggest that direct European invasion by foreign powers is unlikely due to Europe's lack of gold, energy, and raw materials relative to the immense cost of occupation. In contrast, nations with vast natural wealth represent primary targets for strategic encirclement. To bypass maritime trade vulnerabilities and secure vital energy supplies, powers like China are establishing direct railway infrastructure into energy-rich allies. Ultimately, modern global rivalries are fought over tangible assets, financial durability, and long-term supply chain control. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.